Finding the right stock can feel like pulling a needle from the haystack. It could be really, really tough, especially if you don't have a solid filtering process. Now, that is what we are here to talk about today. We're going to talk about filtering processes. We're going to talk about how you can filter all the different stocks in the market. There's 10,000 different stocks in the market, and we're going to talk to you about how you can filter it down, not just into, say, a universe of a few hundred, not even down to, say, a top 50, but how you could filter it all down into the two or three that you're going to actually go out and buy. Hi, everybody. My name is Mike. Welcome to Trade Smart Tuesday. Let's hop over to the slide deck and get things started. For those of you that are joining us live, welcome. Get your questions in. We're going to go through this presentation. We're going to have a lot to share. Feel free uh, to take screenshots for some of these slides, but um, ask lots of questions, and we'll have plenty of time at the end to go through questions. So, first off, like I said before, there's 10,000 stocks in the stock market, over 10,000. Knowing which ones to focus on can be extremely overwhelming. Filters can help us narrow down the playing field substantially. The filters I run narrow the market down into the top 3.5% of stocks that I want to focus on, and it does it in minutes. When I was trading part time, well, we're going back to when I first started with Can Slim and IBD and even running screens over in MarketSmith. And we'll take a look at MarketSmith later on. But I would run screens on my way home. On my way home from work, right? So I'm sitting there with my laptop and I'm tethered to the internet, and I'm trying to run screens on my way home, on my commute home from work. And I'm able to do it then. And just doing that filters out so much of the noise. And it's this process. I'm sharing it with you because this process is a big part of what helped me to eventually be able to leave the day job behind and now do all this full time. So, filtering down the market into just a handful of stocks, 350 for my universe list, you could do that in just a few minutes with the screening that we're going to do, with the filtering that we're going to do. But that's just the start. 350 names is still a lot to go through. And so I want to take you, I want to get the list down, not from 350, but I want to have a list that's all the way down to about three names on it, right? The three that I'm actually going to trade. And I'm only going to take these three if and only if they have solid breakouts. So what filtering does, it gets me a manageable list of stocks. It gets me stocks that with high potential. It helps me save a lot of time downstream. Prepping ahead saves me from basically running around like a chicken with its head cut off. It gives me better decision making, and it helps to enhance my trading strategy overall. Now let's walk through some of the criteria that I filter for. I like to trade high momentum growth stocks. I'm going to share three filters that I use and all the criteria for those three filters. This can be populated into probably most screeners out there. So feel free to, again, take screenshots or hop on our free newsletter, because I will be sending this out to people on our newsletter tomorrow. So here is where you could go and get the newsletter. You could go over to marrowwealth.com/newsletter and get the newsletter over there. All right. So For those of you who are watching this later on as a recording, all you have to do is just, again, go onto the newsletter. We'll put the link down in the description, and then get in contact with me. All right. So all that said, here is the first screen that I like to run. So super earnings growth. Where did I get this criteria from, and why is it important? I initially got this criteria from William O'Neill. William O'Neill is the guy that wrote How to Make Money in Stocks. He's the one that came up with CanSlim, and he also came up with Investors Business Daily. He's the guy that founded Investors Business Daily. And the principles that he used were to look for stocks that had extraordinary earnings, extraordinary sales, something game changing about the company, something new about the company. He would look at the supply and demand, the leadership qualities. Did it have institutional sponsorship? Was it moving with the market? So it had all these different things. And so the way that I learned how to screen was to not try to fit all that stuff into a single screen, but to start to break it out. So the first thing that I wanted to look for was super earnings growth. And these are the things that I keep inside that screen. Earnings percentage change per quarter, 50% or greater. Accelerating EPS for the last 3 quarters. I'm not going to read all of it to you. You've got it there. Take your screenshot. But one thing that I do want to highlight on here is the current price and the 50-day average volume, right? So I'm not looking for ultra cheap stocks. I want it to be at least $5 or higher. Well, when it's $5 or higher, that's when you could start to see more of the institution, or at least some of the smaller institutions, starting to get involved. And then when price starts to move up, then some of the big boys can get involved. But price can have pretty big moves at $5 a share, and you could still have some decent liquidity depending on the names. I'll also filter for 50-day average volume being greater than 150,000. And I'll filter it in this way because even if a stock is trading at $5, if a stock's trading at $5, it's got to have a lot more than 150. But if I jacked up the average volume to say 400, 500,000, most plenty of other stocks wouldn't make it, and it wouldn't be a good screen. So this is what I'm looking for so far. As you guys have questions, please put them into the chat. Okay, on to the next slide. Super sales growth. Basically the same things, but for sales. Also, the composite rating. The composite rating takes all the different CanSlim criteria, takes a look at all the stocks in the universe, right, in the entire market, and then it's like these ones are in the top 90%. I want to see that. That's why I look at the comp ratings. And then finally, the one that I want to share with you is the rocket scan. And we're going to take a look at these scans. We're going to demo them in just a little bit too. But I want to give you the definitions of the types of things that I'm looking for. And these 3 scans, right? So there's more. There's other things that I'll filter for too, but these 3 give you a fantastic start. So rocket scan, well, what's that mean? That means that I'm looking for stocks that have an extraordinary move, right? If a stock is able to move over 100% in just 3 months, that is a very powerful move. And like I mentioned before, I like to trade high momentum growth stocks. And this is going to put me in that pool. And it really speaks to fishing in the right pool. If let's say we didn't filter and we're just seeing what happens to be moving on the day, then that's where we're all over the place. But if we start with a much smaller pool of stocks, it's going to give us a much higher probability of picking the right names. So, yeah, well, with this, The main thing is that 100% move in 3 months or less, and then I wanted to consolidate. I wanted to consolidate no more than 40%. This is going to capture, if you're familiar with William O'Neill, and if you're familiar with Mark Minervini, and if you're familiar with Leif Serrata, all these guys are market wizards, right? So, market wizards, US investing champions. So, O'Neill, high type flag, 100% move, 5 week consolidation, about a 25% consolidation in the flag area for 3 to 5 weeks. Captures those. Then the Minervini power play, 100% move in 8 weeks or less. And then you could consolidate for 2 to 3 weeks in about a 15% range. Then the Leif Serrata rocket rocket base. It's basically a broken high type flag where it corrects more than 25% and it bases for more than the 5 week maximum in the flag portion. So it's capturing all those. So let's head over to Market Surge and see all this in action. Right, so let's fire up Market Surge. So here's Market Surge. So I run a variety of screens. You can see them right there. The ones that we were talking about were in the weekly screens. So here is the screen, and I set it up in this way here that makes it very simple to input the criteria. And so whether you're using this, right, Market Surge isn't paying me anything. You could go and take this criteria and put it into DeepView. If you have DeepView, I just started speaking to the guys over at DeepView. They gave me access to it. I'm playing around with it. I was able to take this screen and pop it right in there. Right. So there's a lot that you could do in other platforms. But with this, you can see that it took the market, right? There's over 10,000 stocks in it, and it dropped it all the way down to just 9 names. So all these names already were moved into my universe list. If you remember the universe list, that filter, right? So all these names are already in there. If they weren't, what I would do is just look at the name that wasn't in there the way that I know, right? And this is a little tip. If you're a Market Surge user, or if you're using DeepView or one of these other ones, for the ones that you move into your universe, flag them, right? That way you could just sort by which ones are in your list versus not in your list. And then instead of looking at 9 names, I might only be looking at 2 names, or in this case, 0 names. Right? Super sales growth. Oh, here's one that didn't make the list yet. Let's take a look at this one. Right, so VIST. Yeah, this one fits the criteria. It's in a base. This one I'm going to move over to my universe list right now. So this is great that this happened on here. So I'm going to click this little down arrow. I'm going to come over to universe. Now it's added, and now I'm going to flag it. So now I know that, okay, that one's on the list. Let's take a look at the rocket scan. And not everything that passes the screen will I necessarily add. Right? So if we come over and take a look at some of these here. Right? So this one, bit deer. Let's take a look at this. I'll flip through just back and forth on some of these daily and weekly charts. This one, you know what? I'll add this one too. Yes, some of these are doing great and deserve to be added, so I'll add them right now. I'm saving myself some of my weekend work. You see how this has the appropriate volume up here? That's how I know that it could be added. Now this one just passed. This one just passed. Then you know why? Just a few days ago, it was not a $5 stock, so it wouldn't pass the screen. Now it is, and now it could be added, right? We don't need to go through every single one of them on here, but oh, there's only a couple more. Let's see here. Red wire. Oh, yeah. So maybe this might be one that doesn't get added. And here's one of the reasons why it wouldn't get added. You see how, like, I just clicked on this day. Hopefully, you're able to see it. And you see how some days the volume is extremely low. Like the volume on this day back here, only 69,000 shares traded. That to me, that's too thin. Even though the most recent volume raised the average daily volume, I don't want to add stocks that are that thin. All right, and this one looks like it could be added. So I'll add this one here. All right. So that's kind of how I use and set up the universe list. So let's talk about some tips. Tip number one, keep it simple. If your screens are too tight, nothing's going to pass. You notice how for each one of the screens that we had, that each one of them had not a whole lot of criteria on it, right? This one only had four things. This one only had one, two, three, four, five, six things on it. This one, two, three, four, five, six, seven things. So none of the screens are super tight, but they already do a fantastic job of narrowing the playing field. So if you put too many things into one screen, then you're always going to come out empty. Part of the magic that happens is you run the screens, right? So this is for point number two, making it semi-automatic. This is where you're running your screens, and that's helping you to filter real quick. You saw how quickly we did that just on this presentation. The next part of it is going to be going through your list. So real quick, how I go through the universe list. So I have this universe list. Right now, there's 342 names on it. So on the weekend, I'll go through this one at a time, tab through it. And as I find stocks that are setting up in the patterns that I'm interested in, I'll move them over to this setups list. Right? That's the most recent setups list. So I would be adding it there. And it's as simple as that. And this process, really, the whole thing, start to finish, maybe takes me about an hour. But let's keep going. The next thing that's going to be important for you as far as all this stuff goes is practice, practice, practice. I can't stress that enough. Practice well, practice consistently. Because if you start running random screens, you're not going to get the full benefit of it. So much of what I get from this process is insight into the market. What do I mean by that? So when I'm building out the universe and when I'm going through and I'm finding the trades that are setting up, that right there is telling me so much about market health that I don't need to tune into the news or the latest headlines or any of that stuff. I'm not reliant on anything else other than what's coming out of the market. Because think about it, if there's more stocks that are passing the screens, what should that tell us? It tells us that it's a halfway decent market environment, right? Well, we set up all these filters, and now there's more stocks, there's more stuff to select from. Awesome. Same thing with going through the universe list manually one at a time and looking for the stocks that are setting up. That's going to tell us quite a bit too. It's going to tell us, well, how many stocks are there that are setting up? Are they quality setups? Are you finding a lot of stocks that are already moving up? What groups are they from? How about stocks that are moving down? What groups are they in? And you could start to extract themes very simply, very easily, just by doing this, and it'll only take you about an hour. So copy all this. And the next thing, the last tip I would say is to uh, get some help, right? Uh, Setting this stuff up initially can sometimes be a little complicated, especially if you're not familiar with the software. So, if you're able to get help, reach out to somebody that can help you set this stuff up, and you'll be on the path to making positive trades and making traction in your portfolio that much quicker. If you want my help, we've got a free 2-week trial to our research program. And let me go and grab the link to that, which I should have had ready to go, but I guess that just tells you how terrible I am at marketing. But uh, the this research program is fantastic, and it's going to help you with not just getting the filtered results, but it's also going to help you get detailed analysis, my full trading plan, so entries, exits, where I plan to, how I plan to manage the trade, sizing, all that. That's all inside the research program. Plus, you also get video explanations every single day. So let me put this into the chat. I'll put the link into the chat. You could go take a free 2-week trial. For those of you that might be watching a recording of this later on, I'll include a link to the free 2-week trial down in the description, wherever you happen to be watching. All right, so let's answer some questions. Let's answer some questions. We've got a whole bunch of people watching over on X and YouTube, all over the place. Let's see. Well, what kind of questions do you guys have for me? Oh, well, look at how it's zooming in on the bear. That's kind of funky. Let's see. Oh, you guys want to go through some stocks? All right. Let's see. Tesla. Is Tesla setting up in a high type flag? It's super close to having that 100% run up in 8 weeks or less. So I'm going to take TradingView and bring TradingView over. I like TradingView a bit better than the other one for looking at charts. Yeah, so here's Tesla. So if we, and Tesla's on my list for tomorrow. So if we measure this out, so 80 trading days, right? Just makes the 8-week mark. It ran 92.8% in 80 days. 80, yeah, that's a lot. It doesn't quite fit the definition if we're being strict, but that is a sensational move. Excuse me, I feel like I have to sneeze. But with this here, it's getting close. I don't think that it's quite actionable yet. The reason why, so it pulled back, reversed off the 10-day exponential moving average, then popped again, then it's bouncing back and forth. Generally, what I like to see 6 days of consolidation before buying in. If I'm in from back here, I'm a happy camper and I'm probably holding through this. I think that this is probably the the low. You have the 21 period exponential moving average, that purple line catching up to the recent price action. Tesla looks good, but would I be a buyer if it can pop out tomorrow? Probably not. Probably not. Earnings is also coming up on the 23rd. So be aware of that. What other questions you guys have? By the way, make sure that you leave comments. Let us know that you're alive and make sure that you like and subscribe wherever you happen to be watching. All right, back to the questions. Oh, yeah. Well, so here is one that the screeners found that I'm in right now. All right, so let's go back to that rocket scan screen. And here is one that I bought just the other day. AMSC. This was also breaking out of a high type flag right over here. And that's right around where it was bought. And so I ended up buying it on this day. Just as so stocks will do this frequently. They'll break out, pull back, set up again, and then get going. So if this is a great point too. If you miss a breakout, don't give up on the stock. That doesn't mean that you chase, but don't kick it off the radar. Continue to watch. And that's one of the reasons why having watch lists, or at least like having something or someone or something watch it for you to tell you, hey, this is setting up and it's setting up again. You can be tuned into these opportunities. So we ended up getting back in, or we ended up getting in, I should say, on AMSC on July the 11th. And so far, I think it's up close to 20%. Let's see, take a measurement of this. Yeah, 17 and a half, 18%. Come on, guys, don't be bashful. Well, what other questions do you have? Don't be shy. Here's one that one of our members was talking about. ZETA. Anthony talking about ZETA. Yeah, this was another one, another fantastic mover. So this one here, now let's take off some of these annotations, right? Because some of these are a little old. So Anthony, when did you get into this one? I think that you had said that you got in right over here. So I like this entry quite a bit. That this is a little aggressive, but aggressiveness in the market could be a good thing. So price had pulled back. You had a great stop placement. One of the things that I like to look for on any trade that I'm going to consider is, where is the exit? And I always like the exit to have plenty of support around it. And the reason why is because if price were to do a U-turn and break below here, then you know that the trade is wrong. But if your stop is too tight, then that's where a lot of people could get shaken out. And unfortunately, that tends to be one of the reasons why people say, "Oh, I don't want to use stops. The market makers hunt for stops." No, you just put your stop in the wrong place. Because if you put your stop in the right place, then price should continue to head lower. At least the chart is broken and it needs to reset. But yeah, Anthony, that this was a fantastic trade. Very well done. Alrighty. So let's let's recap. Filtering helps you. Number one, get a manageable list of stocks. Number two, it helps you to focus on stocks with high potential. Number three, it saves you a lot of time downstream. Yes, there is some labor in running all these screens and filters. If it takes you about an hour on a weekend, that's about the amount of time that it'll take you. During the week, it'll be a little bit less since you have bulk of work done. But doing that will save you hours and hours and hours because your focus is narrowed. And then you're able to make better decisions, which is number four, and it'll enhance your trading strategy overall. So, once more, start your free 2-week trial to our research program, and we'll see you in there. Until next time, take care, much love, and God bless everybody.